Hey, what's going on, everybody? It's Rob Foglia, real estate broker, coach, and author of Real Estate Reset. I wanted to do a quick video today and talk about what might be some of the biggest news or at least rumors that we've had in the real estate industry for a minute now, and that is the rumors and talk of the 50-year mortgage. There's been a lot of talk about it recently, and I want to just give you the facts on it, give you my 2 cents, my opinion on it, and go from there. But before we get into that, I just want to share with you, it's not just Casual Monday today. I am rocking my St. Jude hoodie today because in less than 3 weeks, I will be running in the St. Jude Half Marathon down in Memphis. I'll be raising money for the kids of St. Jude. If you're not familiar with St. Jude Children's Research Hospital, it's an amazing cause. Basically, they're on a mission to help rid the world of cancer, and their mission is that no child ever dies of cancer. Obviously, there's a lot of great children's hospitals out there. The reason why I love St. Jude so much is that none of their patients ever receive a bill. They all go there for free, and I just love that they're on a mission to help save kids. And if you have any extra money, especially here around the holidays, I know it can be tough, but if you have any extra money, I would love your support. Head over to heroes.stjude.org/run 25. When you do, you should see something that looks just like this. My fundraising page right here. We might actually up that goal. I'm at 750 right now for the our fundraising. Why not go a little bit higher? We'll see. But just wanted to share with you that that this fundraising here would love your support. Thank you so much for considering. Let's get back to the topic of this video, and that is the 50-year mortgage. I find it interesting, the backlash though of the 50-year mortgage, mainly because if you think about it, a 30-year mortgage, there's a lot of interest on the front end. It just is what it is. And, it is a way for somebody to buy an expensive asset like a home and be able to get their foot in the door on that. We're going to look at things very objectively. We're going to look at the numbers objectively, see if it makes sense, and to go from there. So let me once again share my screen with you. All right. So what I've got pulled up here is I've actually got two mortgage calculators going. And I've just got, I did the math for you, so we don't need to do this. We don't need to do it live on screen. I just took a roughly median home price for the Nashville area, 500,000. Obviously, it depends on the area. Some will be more, some will be less. We'll just leave it at that. And assuming somebody's got 20% to put down, I am not taking into consideration taxes, insurance, PMI. We're not talking about any of that stuff today. This is purely principal interest. What does it pay off? Does it matter? And you can see right here, a $500,000 home, your principal and interest payment for this property would be about $2,500. Compare that to a 50-year mortgage. It'd be about $2,200. So about a $300 a month difference. Now, on top of that, that's a 50-year mortgage at the same rate. Just say it was, instead of 6.5. I'm just curious, what happens with it if I plug that in? Instead of it being 2,200, man, it's only about 2,367. It's only about $150 a month difference. That is not that's not too different. I'll say that. However, just say it's the same rate. Say it's 30-year or 50-year, it's the same rate. $300 a month difference, that might make an impact for people. Now, I wanted to share that with you because a $300 a month difference, you might be thinking, Rob, it's just 300 bucks. Right. And now, granted, I get that. To some of y'all, $300 is just $300. You're like, hey, we could figure out $300. To some people, man, $300 could be the world. That could be their car payment. That all of a sudden now they can actually afford a car so they can get to and from work, and that they can actually, work their job and make more money, and they can advance their life because of a lower payment. I personally don't think anybody should aim to be locked into a debt for 50 years. I mean, what's next? Like, you're born and you're given a mortgage to sign. I mean, of course not. Like that's, 50 years for a debt, man, that is a lot. But think about it objectively, right? A 30-year mortgage, it's very heavy on interest on the front end. Take mortgages even out of it for a minute, right? There are car companies that are out there that offer 84-month car loans. That's 7 years. Now, historically, real estate matures, right? I mean, obviously, no one has a crystal ball, and I can't tell you what's going to happen in the world. But historically, real estate goes up about 3 to 4% every single year. Cars, man, they depreciate by like 30% the moment you drive it off the lot. And yet there are car companies that have 6 and 7 year, payment plans, which is just ridiculous. Like that is debt that you're saddled to. And yet for some reason, like we overlook that and we judge a 50-year mortgage. I'm really confused about that. I want to urge everybody who's within earshot and checking this out just to look at the facts. Rely on those who are supposed to be educating you, like me, like your mortgage lender, to make sure that you're making the best financial decision for you. In fact, here, let me give you a real quick example and a personal example. My favorite mortgage guy, in fact, I have not talked with him about this yet, so I'm curious. Whenever I do chat with him, I'm curious to see what his thoughts are on this. But my favorite mortgage guy, Randall. So Randall, he's done my loans for my house. Like he's just been my guy for almost the entire time I've been in real estate. Maybe the entire time I've been in real estate. Really, he's probably the first mortgage lender I can think of that I went to and was like, "Hey, I've got a question." He helped, and there we go. That's how it started. I have talked with Randall about, hey, do you get a 15-year? Do you get a 30? What makes sense? He would tell me that if you looked at your options and you see a 30-year versus a 15-year, the interest savings, like the interest percent, is usually not a big difference. Like 3/4% in the long run, yeah, it's going to add up, but it's not going to be a huge savings. You're not talking about the difference between like say 6% at a 30-year and a 3% at a 15-year. It's not that big of a difference. And so he would actually advocate to go a 30-year, even if you can afford a 15, mainly because you're going to give yourself more flexibility. That if you run into a situation where, say, you had a 15-year note and your payment was much higher, well, in that situation, you're locked into that high payment. And say somebody loses their job, money's tight, well, they have a high payment that they're locked into, they have to make. Whereas the 30-year fixed mortgage, they can put more toward the principal. In fact, I want to say there's an old stat that if you pay one extra payment toward your principal every single year, you knock like 8 years off the life of the loan. That you could do that. In essence, you have a 22-year loan in that scenario. Now, granted, I mean, that's a little bit of a hypothetical, but what I'm trying to get at here is that what Randall would advocate for is the flexibility of the longer term and the smaller payment. So you can pay it off early. There's no prepayment penalty, and yet you'd have more flexibility. I do personally believe that a 50-year note, while not ideal for anybody to have that much interest stacked on the front end, it could allow people to get into a home that couldn't otherwise afford it. I mean, just thinking about those two numbers that I showed you all a minute ago, the 2,200 and the 2,500, right? Just very roughly, is just say those were the two options somebody had. That $300 payment difference, $300 a month payment difference, that $300 a month payment difference might be the difference between somebody becoming a homeowner and not, somebody continuing to rent and not. That might be the difference between somebody setting their family on a trajectory to changing their generational wealth cycle and being stuck in a situation where they have to rent month after month and year after year. And so I just want to encourage everybody, have an open mind about a situation like this. It's not just about the politics. I don't care whose name is attached to something. We do too much of thinking, is it left side or right side, or, it really doesn't matter. We should just be looking at it and saying, hey, is this going to benefit society? I think the 50-year might, just throwing that out there, calling a spade a spade. Anyway, appreciate y'all checking this out. As always, thank you. Like and subscribe for more content like this. And please consider donating to St. Jude to help a great organization save kids. Thank y'all so much. We'll talk soon.